Here we go. It's that time again. That time again. Who do we got there? And hello, South Florida. Welcome to our midweek edition, the midweek edition of the Real Estate Show, heard here live Monday through Friday. That is 5 days a week, 5 days live at 5 o'clock, 5 p.m. Eastern, that is. And coming at you, 5 different methods on our AM, on our FM, through the radio apps that you can download and take with you on your smartphones, as well as our website, which is automaticlandlord.com. That's automaticlandlord.com. And in addition to that, you can also watch us and catch us live on Facebook Live. For those of you that want to join Felipe and Cindy and the rest of the gang there, John and Erica, we are here live 5 days, 5 different ways, and joined now by Cheryl there live on Facebook. We got a great show for you today on our midweek report. There is a lot going on in the real estate market. And as you know, if you are a regular listener and you are a regular attendee of the Real Estate Show, you know that every week we start out the week, Mondays on a mission, laying out an agenda, the theme for the week, always about real estate, but different aspects. And we also not only look at specific focused aspects on our Monday as we pick sort of that overarching theme to cover for the rest of the week. And then each day of the week, we take a different view on those different aspects. So you get a good variety of information, really worth every single day is a new show. They're always live, always fresh, and hopefully very informative. In particular, one of our favorite shows, besides our Mondays on a Mission, where we kind of do the definition of the mission. We talk about the agenda, what we're going to talk about each particular day of the week. And then we get into our tools, tips, and techniques. Now, this week, after having spent a whole bunch of weeks, building a case for the investor side of the business, for talking about the asset management companies, talking about the REO companies, talking about the lenders, what their particular perspective is. I love all these thumbs going on there. It's like fireworks going on. And what they are going to do when the moratoriums are lifted. And of course, getting into the tools, tips, and techniques, we were also talking about the fact that the moratoriums are winding down. And we talked about how the Fed is signaling that we are at the near the end of this propped up economy that we're talking about. Hey, Cheryl. And what we're seeing here, we talked about who was now trying to extend the moratoriums. Just yesterday, we also informed that there was a coalition of landlords and lenders that were actually trying to invalidate the moratoriums so that we could get on with a regular economy. And unfortunately, surprising to many people, the Republican-appointed Supreme Court supported the CDC's ability to continue in the public's health best interest to extend the moratorium, which they did one more time. And the CDC did come out. In fact, they tipped their cards and said this is going to be the last time that they will step in to extend the moratorium. They were extending it now to July 31st. So that's now that's a done deal. That's out in the public. You heard it first here, though. And then you now have it being left up perhaps to individual areas. California, as I mentioned yesterday, already said that they were going to extend it out till September 30th. California being probably the most liberal of all of our states. A number of states, Texas, Florida, have already said that they're not extending it. And that they want to get back to a realistic or real market. So this is all in the concept talking about, why real estate is the best business in the world. And it's an easy argument to defend here all the time. And now 30 years in the real estate business, 23 of those live right here on the air with you guys, always talking about what the market's doing, giving you some indications of where we're going with the marketplace, maybe where the best places to be in the marketplace. And like I said earlier, and I said it early on, I said, if you're thinking that this marketplace is another 2008, you're wildly off the mark. If you're expecting the foreclosure tsunami, wait, sitting down, because I've been over the last 6 weeks talking about all the different reasons, and each time, sometimes for a whole week, spending time giving you the information why it's not going to happen exactly that way. So let's dive in to some of the headlines that I wanted to share with you. Now, keeping in mind, the whole conversation, why real estate is the best business in the world. And I call it the ideal business, in fact. And I use the acronym, the word ideal, as a reminder. So if you ever forget, remember, the I stands for income. Real estate provides real cash flow, real, predictable, consistent, and ever increasing income in the form of rental property income. And whether it's residential, commercial, single family, multifamily, townhouses, or otherwise, real estate provides real cash spendable, not theoretical, not paper profits, and not future things like CDs that pay you in 5 years and then you lose it all if you have to take it out early. Real estate, it's money on the barrel every month, every month. The D in ideal stands for depreciation, but it also represents all of the tax benefits. Real estate is the most tax favored investment vehicle out there, period. And along with the other 5 reasons that go along with the word ideal is why real estate has created more millionaires, and real estate doesn't require, extensive education, doesn't even require a license. And yet you can be very successful in the real estate business. You can take advantage of it from any location. We're going to talk about that in the news today too. I found a cool article about that. Real estate is scalable. Real estate is flexible. You can work it full-time. You can do it part-time. It is very, very flexible. And so there's a number of different reasons. The E in the word ideal stands for the equity. And I'm talking about equity buildup. And what's cool about that, I can even break that E into, it could be 3 E's. It could be ideal in the conversation. It's equity built up through the systematic pay down of the mortgage, right? Your tenant sends you a check. You send a part of that check to the mortgage company. The mortgage company credits part of that payment to the principal, reducing the payment. And so even in a theoretical flat market, let's talk about some of the states in the Rust Belt where appreciation is somewhere between 0 and 3% consistently. Just the equity buildup from the pay down of the mortgage creates wealth and millionaires, and then later on bumps up your cash flow. Then you've got the equity buildup through the improvement of property. I can add a bathroom, I can add bedrooms, I can enclose a garage, I can modernize, update, and upgrade properties, thereby creating greater equity. And many times the sweat equity, or I can build that equity at a discount. I put in $2 of repair, which becomes $10 in increased equity. So I can actually force the equity buildup in the house, and through additional equity pay down, through forced equity buildup, and not to mention that I can also negotiate equity into my real estate upon the purchase. So there's 3 different ways that I can build extra equity that I actually have control and influence. I have control and influence over the I, the D. I have control and influence over the D, the tax advantages that I choose. And there's different things that I can do extra to get extra benefit from real estate. In addition to that, I've got the A in ideal, which is the appreciation. Now, I call that the icing on the cake. I don't count on it. I don't bet on it, but I do enjoy it. And if you're in the real estate market right now, you are enjoying that icing on the cake, the appreciation that's going on, double-digit appreciation in some areas. And that's likely to continue in the marketplace right now. And finally, the L in ideal stands for the leverage, or the ability for me to control a large value property with a relatively small down payment. So, and if I were to invest my $10,000 into a 5% appreciating asset out there, a CD, which will never get 5% right now. You're lucky in a bank account if you'll get point something percent. But make believe that you've had a safe and consistent investment like real estate, that you could get 5%. Well, my $10,000, 5% of that would be $500, and that's my gain. If I took that same $10,000 as a 10% down payment on a $100,000 house, and it too appreciates only 5%, now my value that has grown, my equity that has grown, is now not $500, but $5,000. And so what was my real rate of return? Well, on my real estate that I own and control, it was $5,000, which is 5%. But on my investment, and now that becomes my equity, my $10,000 plus the $5,000 in equity is now 15. That's a 50% rate of return. Find that somewhere else without taking crazy, outlandish risks or buying paper investments that could just as easily go down and disappear. And disappear literally, I mean go to zero value, and real estate does not ever go to zero value. So there's your definition of the ideal investment. Why I've been saying for the entire week, and I will for the rest of the week. In fact, way beyond this week, I'll be talking about why real estate. But I gave on Tuesday the 10 reasons, from work from anywhere. So anyway, first article that I want to share with you before the break: pending home sales reached the highest May mark in 16 years. We're talking about before the Great Recession. So that's the last time it was higher than this. And pending home sales reached its highest mark for the month of May since 2005. It's up 8% from the previous month of April, as low inventory continues to drive buyers to snatch up available real estate. So 8% right now. And what's kind of cool is that the strong increase in home sales and transactions in May, right? That's the last completed month. We're now almost finished June, so we're going to have some more numbers. I'll talk a little bit more about that. But following what they saw as a dip in the month of April, it was a surprise to some analysts to see such a large gain in the month of May. Obviously, we're coming out of the winter months in a lot of the Northeast. There's a whole bunch of different smaller reasons that we saw that increase. The chief economist for the National Association of Realtors, Lawrence Yun, he attributed the home sales increase to mortgage rates remaining low and below 3% nationwide, as well as an uptick nationally in listings, which is very important because, right, sales could only go up if there's inventory of things to sell. So we're seeing, and I like this, and I'm extremely optimistic that this is happening, but we're seeing an uptick in inventory now. And I'm going to talk about a couple of different sources of that uptick. Obviously, when they lift the moratorium, there will be some more inventory on the market. How long that inventory will last on the market, or if it does have a positive impact of sort of smoothing out the difference between supply and demand, that'll be a great thing. It'll also open up opportunities for a lot of home buyers. Remember, there's a lot of people that are losing deal after deal after deal in the bidding wars in the hot areas. There are a lot of people that are getting priced out. So a little bit of a softening in the market, I'm going to tell you, would be a very, very healthy thing. So contract signings on new homes, okay, so now we're talking about pending home sales, increased 13% year over year. So from May of last year to May of this year, up 13 double digits percent this year. So all four regions, and this is what I also like, is that it's very consistent across the country. All four regions reported month over month and year-over-year home sale gains. That's the number of units being sold per the release of the National Association of Realtors, which, of course, through all the multiple listings and all the data that they collect, has pretty accurate and up-to-date information. The Northeast increased 15.5%, which might be a little bit of a surprise for you, in May. A 54% climb from 2020, because obviously during a pandemic, the Northeast was locked down tighter than the southern Sun Belt. In the Midwest, sales increased 6.7% monthly and 7.8% year over year. The South reported a 4.9% increase, a 6.1% increase year over year, and the West increased 10.9%, up 12.5%. So I'm going to leave on that note for the break. The metros, just one last thing I'm going to tell you, that the metros with the largest year over year increase in pending home sales were Tampa, the Tampa, St. Petersburg, Clearwater area in Florida, Detroit, Warren, and Dearborn areas they're getting a big revival up in that area. Nashville, Davidson, Murfreesboro. In fact, I've got a client in Murfreesboro, and Franklin as well in the Tennessee area. Tennessee's a hot, and I love the people in Tennessee. Riverside, San Bernardino, Ontario, those are all suburbs or outskirts of Southern California. No surprise that they're super hot out there. And that's despite the pretty draconian lockdowns that they've been going through. And then finally, what was the other one that I wanted to share with you guys? The Jacksonville, Florida. Again, second Florida one in the top 5 there. So anyway, we're going to go ahead and take a quick break. Hear a few words from our sponsors here on the Midweek Report of the Real Estate Show. My name is Eric Willner. I'm your host, and I promise, be right back. Simone from Boca Raton is on the phone. Hey, Mike, how are you? Cheryl Ann, haven't seen you in a while. In fact, both of my Cheryl Anns have been AWOL. They spell differently, but they're pronounced the same. John Brown, the best handyman in town, is now on the line too. So what's everybody doing for 4th of July? Staying close? Or are you going to be among the many, 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 many people who are traveling? It's amazing the demand for flight and everything. And as you can imagine, probably affecting the prices right now for traveling and hotels and everything else. Cheryl Ann, the $6 million woman, had a hip replacement surgery. How did that go? I hope everything is going well and a smooth recovery. But you got to be close to the $6 million woman. Another good reason for the inventory is home construction, which obviously picked up and is finally coming in. Smart move. Cindy said she's staying close to home, celebrating the 4th of July with friends. We're going to stay close to home here too. So looking forward to a calm and safe 4th of July. And welcome back. For those of you just joining us here on the Real Estate Show, my name is Eric Willner. I'm your host here. We are live Monday through Friday on this show. If you just happen to come across the dial here, we're on both the AM station, 1470 locally, 95.3 and 96.9 on the FM dials. So you can just search for WWNN Money Talk Radio. It's all part of the network. You can also download one of the free apps, the iHeartRadio app, the TuneIn app. WWNN even has an app in the store, so you can get that one that hooks you directly right into the station. You can listen to the station all day long, no matter where you are. The days of local radio they're probably gonna have to change that terminology. And you can't take anything for granted. You could be listening on your phone, on your portable device. You could be listening on your computer, and be able to listen to your favorite station no matter where it's broadcast from. Our show, in fact, has been streaming for years on our website at Automatic Landlord. You can get all the information of how to find it there. You can get the replays there on demand. You can even download podcast version and take it with you and listen to it offline. And by the way, not only are we live Monday through Friday, 5 days a week, 5 p.m. Eastern to be live, those 5 different channels, we are also rebroadcast as sort of a marathon on Sunday nights at 9 p.m. Eastern, wherever you're listening to us right now, other than on the Facebook page, because that's only we don't go live. But you can listen to us. All the radio stations play us at 9 p.m. That's Eastern time, and all shows back to back. So if you want to catch the whole drift and sort of put the puzzle back together in one show, there you go, on Sunday night at 9 p.m., of course, and then on demand on our website at Automatic Landlord. So another article that I wanted to touch, and maybe I'll come back there on the home sales increasing numbers, the pending home sales increasing number. I got another Ruben Gonzalez, the chief economist for Keller Williams. No small outfit there, added that he is optimistic that new home construction will also continue to increase, will continue to gain momentum. Nobody's talking about this imminent crash. The only people who are saying that kind of stuff are the people who are trying to sell courses on how to buy crashed properties, and you're going to own a course but no crashed properties. We're going to continue to gain momentum right through the rest of the year. And if we can avoid further supply chain disruptions, and that's probably the biggest thing, it's supply of houses, supply of building materials, and but no lack of supply of money chasing those properties. Lumber prices have actually come down from all-time highs, but they're still not low. They're not back to where they once were. The continued distribution of multiple COVID vaccines is likely and is a key to the return to affordable housing and affordable building materials. How do you like that? They're now tying the vaccine to affordable housing. That's another new one, an interesting connection, if you will. Builders have told Housing Wire that they're struggling to find full crews to build homes as enhanced unemployment benefits enacted by the government to combat the effects of the pandemic are keeping workers from coming to work. So that's one article that I wanted to share. Coldwell Banker. And, we've been talking about all the brokerage houses, CEOs from the stock and equities in Wall Street are saying that real estate is likely to continue well. Coldwell Banker says investors, and this has been a criticism of the market, saying that what's causing this is that the big investors and the institutional investors are snatching up homes too much, and that's what's pushing the price out there. What's interesting, and this is a real interesting statistic, why we've been spending a lot of time talking about down payment assistance, why we talk a lot about first-time and affordable housing, because that, my friends, is really where 40% of all sales are from first-time home buyers. And remember, the definition of first-time home buyers is not somebody that's never owned a home. It's someone who hasn't owned a home in the last 3 years. So there's all the people that were displaced in 2008. There's all the millennials that's their first home, whatever their income strata is. So don't think that first-time home buyer is a struggling buyer. Look at home prices. That certainly isn't the case. And with this huge, you want to talk about a tsunami of buyers, not sellers, and that is coming from the millennials. So anyway, the CEO from Coldwell Banker, and I won't be able to get into that, but he was basically saying that institutional investors are not the cause. They are buying properties, make no mistake about that, but it's not the main reason for the ultra hot U.S. market. And that's according to statistics provided by the Coldwell Banker CEO. So there's just a couple of the headlines. Again, why real estate. Now, I didn't even get to share this one, but then maybe we'll talk about tomorrow in our About the Money segment, real estate brokerages are embracing, talk about modernization, long-term remote work arrangements. So we'll talk more about that in the show tomorrow. So that's it for today. This is your host, Eric Willner, for The Real Estate Show. We'll be back again, same place, same time tomorrow. Until then, drive safe, wash those hands, and make it a great day. Bye-bye. Boom. Take care, Brian. Thank you.